Okay.
Yusuf and
Give me a second. I'm kicking off the stream right now.
Yeah, yeah. Could you allow for me to turn on camera as well?
Oh yeah, hold on a second. Um, Let me just check the stream. All right, looks like we're live
we're live.
and give it a shot. There we go.
Oh,
All right, good.
all right.
Can I sing? No, I cannot sing.
Okay, so does it look fine to you guys?
Yep, looks good.
Okay, guys, yeah. So let's just begin.
Is it not cooperating there?
It
HM?
is.
Oh, Heavy Metal
Oh,
Cook's trying to play some guitar for the
oh,
crowd here, but it doesn't.
Trying to, but like I can't get my amp to cooperate. Let me try this again. Bass guitar, and I have a guitar amp. Oh, holy!
I heard a little buzz.
Yeah, that's a buzz, but
No, nothing's coming out.
see, nothing good is coming out of that.
No.
Hang on a second. I'm gonna have to. I think something happened with the port
Yeah.
here, because whenever I touch it, or whenever I'm not touching it, I'm getting a buzz. Whenever I touch it, it stops
Mhm.
buzzing. So there's something wrong there.
mm,
All right. Well, we'll
Oh
let
well,
Yusuf go ahead and get started then.
bummer.
yep. I'm just gonna begin now. So hello everyone. Today we are going to start with the day 2 of the LP Army Bootcamp. Welcome you all. So first of all, we have this disclaimer here. The content in this presentation and throughout this course is for informational purposes only. The information herein should not be construed as financial advice. The instructors are not financial professionals, and any investments or positions you open, you do so at your own risk. Any funds you invest should be funds you are willing to lose. By entering this course, you agree to these terms, assume all responsibility, and agree to hold Meteora and instructors harmless for any loss of funds. And you should not continue with this course if you do not agree to this disclaimer and these terms. Yep. So the prerequisites for today, you'll obviously have to agree to the terms and conditions. You'll need a Web3 wallet or a browser extension that supports Solana so that you can do transactions on the Solana blockchain. And you will need a wallet funded with 1 Sol. And of course, as it is with crypto and most other things that we want to learn, you will have to be prepared to lose before you win. Because by losing, you learn, and when you learn, you will essentially become a better you will essentially become better at what you are learning. So the instructor introduction. Today it will be me, Yusuf, and Mario presenting. So yeah, something about me. My name is Yusuf, obviously. I'm 19 years old. I live in Denmark, and my parents are from Morocco. I'm actually in Morocco right now, so yeah, that's pretty cool. I'm a so-called Solana OG. I've been here since 2021, gained a ton of experience through several projects and different alpha groups and stuff like that I've worked with and spent my time on. And currently I have a full-time job actually with Photon, and I'm going to start university next year. I've just finished something that is called Gymnasium. It's like a mix between college and high school here in Denmark. And what I do in my free time, I code. I do some liquidity providing. I've coded in Python for the past 2 years, and I've built some quite awesome projects. I've also built like a canteen app for my old school. Yeah, and then I LP my free time when I want to trade on an interesting pair. we have Mario here. If he
Yeah, sure. So obviously, my name is Mario. I've been in crypto since 2011, and obviously, I've fumbled every bag I've held since then. I've been mining Ethereum. Got into Solana, I think, back in 2020, and I just recently came back to crypto. Joined the Goose DAO, and I pretty much do DLMMs on a daily basis now.
all right, perfect. So now we've had a introduction to who me and Mario is. So in order to get the most out of this bootcamp today, you guys should use the Q&A feature in Zoom. Ask whatever questions that Gila, could you allow me to share a video? For some reason,
Yeah, I turned it off. It was a bit distracting with the moving around, so people requested it to be
okay,
turned
cool.
off. Yeah.
Sure, no problem, no problem. Yeah. So you guys should use the Q&A feature here in Zoom if you have any questions about what I'm going to talk about today. That's really important, and I'll make sure to answer most of them. And also, you will need to you need to complete some exercises later on today when we'll introduce the rules for the graduation exam. Yeah. And you can also ask if you have any questions for the instructor team here or anything related to Meteora, the element pools, and so on. Feel free to join the Discord and ask any questions that you have there. Okay, so table of content for today. So to begin with, we'll have a discussion about some tools, fundamentals in reading charts, and strategies to earn profit. We'll look at previous positions that I've made, and we'll try to analyze them and reverse engineer them to understand how and why they became profitable. So by the end of today's session, you will have examples of advanced and practical DLMM techniques to build on. You will understand the correlation between risks and different LP strategies. You will add to your market making toolkit. You'll be more confident, hopefully, in engaging with the in the Meteora Discord, and you will hopefully graduate from being a trainee to a LP Army private by submitting your DLMM results. Okay, so these are some of the tools that we touched on yesterday. We'll be talking, or we'll be using them. We'll be using some of them as well today. Yeah. Okay, cool. So yes, providing liquidity to markets. So generally, when liquidity providers have provided liquidity, they've generally wanted price to be more or less stable in order to prevent divergence loss from price going out of range, right? So many people, when they think of liquidity provision, they would think like this first rectangle here, they think such a price movement would be smart to provide liquidity to, right? Or this other rectangle over here. But today we'll touch on why you can utilize DLMMing, to be exact, for more volatile markets, because in every market there will be certain points in time where price simply is more volatile, as we can see over here. So providing liquidity to a DLMM pool on Meteora. When you provide liquidity to a pair of tokens in a DLMM pool on Meteora, you are essentially swapping the assets that you provided in the pair constantly as price moves from bin to bin. And for each swap that happens with any of your bins, you're earning a small percentage, or you're earning a fee. This fee comes from the base fee that we touched on yesterday. This ultimately means that there are two goals, or in my opinion at least, there are two goals that you can utilize DLMM to achieve, right? You can either achieve a positive return from divergence loss, or you can achieve a positive return from fees, or both, right? Like most of the actually, if you want to achieve a positive return from divergence loss and providing liquidity, you will essentially also be earning fees because you are providing liquidity. Yeah, so when you provide liquidity, you need to keep these two goals in mind and focus on either of them in order to optimize your LP earnings. And there are also some very important things to consider when wanting to make a position with Meteora DLMM. Since you are concentrating your liquidity within sometimes a very tight price range, you'll need some basic price theory or an understanding of some basic price theory. So that means support and resistance areas. You also need to be aware and observe certain price events. That could be, for instance, if we're talking about meme coins, it could be if dev sells a large portion of the token supply. It could be political events, even like the launch of a Bitcoin ETF. We all remember what happened when that launched. There was some bullish news, and then the market was quite kind of bullish, right? So and you will ultimately need to use on-chain tools to back your analysis with real-time data, so that you, for instance, can see when the dev sells a large supply, a large amount of the token supply, and act accordingly. Yes. So we had these two goals that I spoke about, and we'll be talking about them now. Achieving a positive return from divergence loss. The definition of this achievement is that your withdrawal consists of a higher USD value compared to your deposit, excluding fees. And the only way that you can obtain this is actually by selling one of your assets in the pair for a higher price than you bought it for. And I have this example here to the right, where someone could have had bought Solana for 167.6 USDT per SOL. He could have bought 5 SOL, for instance, right? And then he could essentially just have allocated much of his liquidity, or all of his liquidity, during this price range here that is shown here at the bottom, right? And that means if or when price would have gone to 170 USDT per SOL, all of his SOL would have been converted to USD, giving him a positive divergence loss as well as some fees, because as you all know, you earn a fee when someone swaps with your liquidity. Yeah. So some important things there are to consider when you want to achieve a positive return from divergence loss is that you want the price ratio to go up. So for this case here, we have a price ratio called 167.6 USDC per SOL. You want this to go up, like you want USDC, you want SOL to go up related to USDC. Yeah, and that also means that it is kind of like spot trading, if your quote is USDC, but there are some benefits, and one of those benefits is, we've discussed it yesterday actually, that when you provide liquidity in a bin, you're essentially swapping your liquidity at the exact price point of that bin that you've provided liquidity to. So if you had provided all of your liquidity into this single bin over here, right? I'm not sure, like, can you guys see my mouse? Or is there some?
Yeah,
Okay,
we see.
Yeah,
okay, cool. So if you, instead of providing liquidity across all of these bins, if you just provided all of your SOL into this bin here, right? You could be 100% sure that if someone trades within this bin, you will be receiving USDC in accordance to this exact price point of this bin. There will be no slippage, no price impact at all, as long as the trade happens within this bin. Yeah, and now we'll look at some positions that I've made in the past and try to analyze them. Right, cool. So a positive divergence loss, yeah. And we'll start by demoing with a meme coin that launched, I think it was yesterday. I LP'd it yesterday, so yeah. But what happened was that I was in the show off your curves chat in the official Meteora Discord. I was discussing with people because many of us in there at that time was providing liquidity to Goldie, so it was doing a lot of volume, etc. Right? But then suddenly out of nowhere, the dev sold a large chunk of the supply, nuking the price by like 50% in relation to USD, right? when this happened, exactly when this happened, someone, Scoot, I'll give him a shout out. He made this post within the show of your curves chat. He said that looks like they've sold finally. When I read that, I bought some. I bought 2 sold worth of Goldie. And wait, I'll see. Yeah, okay, cool. We can actually see some chart here. So this was when Scoot posted his comment, right? And I bought 2 soul worth of Goldie at this price here. Exactly. What happened when I bought 2 soul worth of Goldie? I got some Goldie, and I provided this Goldie into a Meteora DLMM pool that had the pair Goldie soul. And then I essentially just made a single-sided. Wait, let me see. Okay, cool. Yeah, and then I made a single-sided bid-ask position with all of my Goldie, essentially selling or swapping my Goldie as the price ratio went up. So as I bought it right over here. So as the price went up, I was essentially swapping all of my Goldie to sold. Yeah. So what happened when I closed my position? Yeah, I closed my position a few minutes later, as price went out of range of my position. And I ended up with 2.26 sold and some fees as well. And the divergence loss was my withdrawal minus my deposit value. So it was 2.264 sold minus 2 sold. That gives me a divergence loss, a positive divergence loss of 0.264 sold. I made around 0.1 sold in fees, and that gives me a P&L of around 0.364 sold, which is around 20% on top of my initial deposit. And this ultimately happened within a few amount of minutes. As we can see, I closed my position 2 minutes after opening it. So it went really quick, and this was only possible due to the fact that someone was observing the this market here called the sold and saw that the developer sold a huge chunk of the supply. Yeah.
Hey,
Cool. Yeah.
that's really good, Yusuf. And um, I'd like to kind of recap a little bit of what
Okay,
you
sure.
did. If you what you did here, this was a really nice play. Can you go back to the chart on the previous slide? Yeah. So so basically, it's almost a combination of LPing as well as trading, right?
Yeah,
So
yeah, exactly.
so basically, there was a big drop in price. So when there's a big drop in price, a lot of times there's retracement, right? So
Mhm.
the price retraces, meaning it goes back up to towards where it was. And you can see this retraced very, very nicely. It went almost right back up to where it was before the dump. So what Youssef did was then he bought Goldie and then he opened a one-sided LP position in a bid ask. Now he could have done either a spot or a bid ask. Um, he did bid ask because he was anticipating that increase back up in price, that was going to happen rather rapidly, which it did exactly. And he went in a fairly tight range. Where was the top of your range, Yusuf? Do you remember?
Honestly, I don't remember, but I believe it was like 20%
Okay.
more than my bottom range. So if I bought, wait a minute, if I bought the Goldie here and I provide liquidity at a, I'm gonna talk with the most significant bits, okay? So if I bought Goldie here and I provide liquidity at 7, my upper range was probably like 9 or something.
Right. Yeah,
Yeah.
that makes sense. Yep. So then in that short period of time, that price appreciation, he earned, he got a positive divergence loss, which I know it sounds a little bit weird to say positive
Yeah,
loss, but
yeah.
he had a favorable divergence in terms of USDC, and in terms of Sol as well. If you think of, well, probably not. Yeah, actually in Sol as well because he
Yeah, it's
acquired
all, yeah.
he
Yeah.
acquired Solana.
Mm.
So so he ended up making a nice profit plus fees by entering that position. So this is a really nice example of making a play, not only when there's sideways movement, but when you're anticipating movement in one direction. So he basically purchased the asset, put it topside, meaning that, he put his liquidity above where the current price was. That way, when the price moves up, his asset appreciates in value, and he basically gets taken out of his position in a favorable manner. So yeah, it's you can play DLMM in sideways markets, but you can also play it in trending markets as well. But you have to guess the right trend, right? Had the asset continued to depreciate and continue to go down, then he would have lost on this play. So
Absolutely. Yeah.
so it really helps if you understand technical analysis and you're able to read charts and things like that when you're going to be making plays like this.
Yep. Absolutely. It also definitely requires experience because you will like I've lost a lot as well, right? But all of these losses that I've experienced are things that I've learned from essentially.
Yeah. And somebody's asking why you chose such a narrow price range.
To be honest, it was because like first of all, I didn't have a lot of time actually when I provide liquidity. Second of all, I was quite scared because the dev sold, right? Like, there are essentially two options when the dev sells. Either it can just go to zero, like if no one believes in it, or there can be some KOLs like key opinion leaders or influencers and stuff like that want to make a CTO or a community takeover, right? They want to they don't want this token here, this token Goldie, they don't want it to die. And then it's ultimately, it depends on risk management, right? If you if you really believe that someone, if you know or believe that someone will do a community takeover, I could essentially just have made a higher, I could have put in a higher upper range, but I wasn't sure. All I was sure on was that there was a lot of volume and price would retrace. I didn't know how much, but I knew that price would do a small retracement.
Perfect. Thank you.
Yeah.
Oh, you're muted, Yusuf, if you're talking.
Oh, okay. Sorry. Yeah, I was talking. Yeah, my bad. Okay, cool. So here we have a less volatile pair, Jupiter/Sol. The previous pair was very volatile, Goldie slash Sol, and this pair is not that volatile. I'll get into why in a bit. But essentially what happened was that I opened a position on a Sol market. I did a two-sided position. Yeah, and I opened it around when price was 0.00521 Jupiter per Sol. Or not, no, Sol per Jupiter, yeah. Okay, cool. So let's do some charts to understand the reasoning behind this specific position. Cool. So yeah. This blue line is the same as this blue line here. The reason for why I draw this line here was that yeah, okay, cool. So first of all, I'm on a higher time frame right now. And when I provide liquidity, much of the times, like especially to more liquid pairs, like Jupiter/Sol, I look at like previous price points. I look at previous data in order to get an understanding of where price could hit if something happened, right? And as we can see here, in the Jupiter/Sol market, a few weeks ago, actually. So I opened my position around here, right? A few weeks before I opened my position, price went to a similar price to when I opened my position. What happened back then was that price immediately, or after a few days, went back up to yeah, to this price here, okay? And I used that information to somehow get an idea of what would happen if the price would go down to this price again, or this price point again, right? And essentially, that's what I did. So a few weeks later, to this first dump, Jupiter the Jupiter/Sol market went to a similar price. Let me see if I can. Okay, cool. Yeah, Jupiter/Sol went to a similar price, and what I did was that I opened a two-sided position. Okay, wait, it's quite hard to show. Just yeah. So what I did was that I opened a two-sided position in the hopes of price retracing a bit. Okay, because that's what I knew. I knew that that at previous times, I knew that previously price had hit this price point here, or around this price point here, and when it did, it retraced. So I just used this previous experience to make a profit. Yeah, okay. So there's some additional information that I used when I opened this position here. This is a Solana/USD market here. Back when Jupiter/Sol went down to this price point here, the first time it did it, wait, Solana actually dumped a lot. Okay, so that's what we can see. This circle here represents this this area here. You know, it's the same day. Yeah, it's the same day, yeah. And Solana went down to like 100 and I'm not sure exactly, but it went down to around 125 USD. What happened back then was that price went up again to around 150 USD, and it went and this was when I opened my position, okay? And price yeah, and this was when I opened my position, yes. Cool. This orange circle here represents this this area here. It's the same time, absolutely the same time. So what I what I thought of when I opened this position here was that, okay, Solana just went down to like 125 USD. That's when I opened my Jupiter/Sol position. And there are essentially two ways or two options to what could happen to what could happen when Solana went to 125 USD. One of them being that price could further dump, or it could hold this beautiful support line that I've outlined here by this blue line here, okay? Because we can see that whenever price has touched like around 125 USD, Solana has gone up in price again, okay? And I used yeah, I used this Solana USD market and how it was acting. I used that information to do my Jupiter/Sol market because because Solana is very correlated to Jupiter. So that means if Solana goes up in price, Jupiter usually goes up in price, and so forth. Yeah, okay. So yeah. So when I opened my position in the Jupiter/Sol market, Solana was at like 125 USD. And I was essentially just betting for price to go up again. So what I did there was that I opened a lot I bought a lot of Jupiter. I also had some extra and spare Sol, and I basically did a two-sided bid-ask position mixed with a spot strategy. I'll try to explain this later once we go into the live LP. And I did such a position, and then I just sold off my Jupiter to Sol as the price ratio went up. Yeah. Yes, okay.
So,
and
oh,
yeah,
I'm sorry, Yusuf, go ahead and finish up that example, and then I wanted to make
I'm just going to show the
Yep.
you know, and then I'm going to talk about this page here. So yeah, this was the P&L. So yeah, I had my position open for 10 hours approximately. I had provided around 300 I deposited 3.4k USD approximately, and made around 3.5k USD after 10 hours. This was like the difference between my withdrawal and my deposit was the divergence loss, and then I made some fees as well on top of it. And it ultimately ended up in around a P&L of around 200 USD. So what I would like to discuss right now.
Could you hold on just a second there?
Yeah, go ahead.
Yeah, so this is great. and I think this is a really nice example of LPing in a more stable position. Um, I guess one thought I have, or one question I have, is why you went two-sided on it instead of one-sided if you were anticipating the retracement.
Yeah, okay. There was a reason for that, and that was basically that I could not be 100% sure the price would retrace back and to earn more fees essentially. So like yeah, these are my two answers.
Okay, yeah, no,
So
that's
the reason,
good.
yes, so
And I
the
think the other thing is, and you know, this is a good strategy is always if you like both assets, and if
mm,
you end up with more than one than the other, then it's probably a good place to LP as well. So I'm sure you're probably
absolutely.
bullish on Jupiter as well as Sol.
Yeah,
So
yeah,
you know, it's kind of a win-win. You know, had it dropped down more, you would have gained more Jupe.
absolutely. Yeah,
So.
yeah.
Um, but David actually asked a really good question, and I'd like
Okay.
all the instructors to provide a response here as well as you, Yusuf,
Mm,
which is, and he asks, as you guys are very well educated on LPing, what are your most common mistakes when someone starts doing LPing? Have you said that you like have a cheat sheet? So I think this is a really great question,
yeah,
and I think I think for me personally, some of the mistakes I've made is, you know, one kind of aping into a token without really, you know, properly reading the
yeah.
charts, understand what's happening with volume, things like that. The other big mistake I've made is not going, if I'm going into a one-sided position in a bid ask, one mistake I've made is I've not gone far down enough, right? I've not anticipated a big enough drop in the price of the token. So what happens is if you don't have enough liquidity down low enough to sort of catch a big drop, a bigger drop than you anticipated, you're losing out on the opportunity to earn fees. You're
Mm,
losing out on the opportunity to acquire more of the token to then, you know, sell it back when it goes back up the other way, when it does finally retrace.
yeah.
So that for me personally is kind of one of my biggest mistakes and
Yep.
something that I've tried to do that I've gotten better at now. So now when I'm entering a one-sided bid-ask position, I make sure to go way further down than I'm even anticipating the price to drop because a lot of times, you know, if you get a big drop, you know, it can really kill you. And the other thing is, if you do get a big drop and you've got liquidity down there to catch it, dynamic fees are going to kick in, and you're really going to
Mm,
print fees really well. So,
yeah.
you know, don't be afraid to give up, you know, potential gains by going down far enough. Now, you know, again, if you go really wide, you're not going to earn as much in fees, but it's a more conservative play. And if the price really tanks on you, you're going to have liquidity to catch it and you're not going to get killed with impermanent loss. So that's
Mm,
kind of my learnings. Maybe, Yusuf, you can kind of talk
yeah.
about some of your mistakes and how you've made some improvements as well.
Absolutely, absolutely. So actually yesterday, so yeah, the Goldie soul market when the dev sold as I spoke about before, right? Because the thing is, I'm not trading based on like alpha groups and stuff like that. I basically only trade. I mean, most of the time I trade basically just based on like on-chain data, right? So price points, where price is going, how is the volume doing, and so on, right? And when the dev sold, I was not aware, like I was not, I didn't even know he would sell, right? Because it's very hard to predict that the developer or someone that holds a large percent of the token supply will sell off his total supply. I didn't predict that, so I did actually lose. I think it was like it was like half a soul, right? That I lost on divergence loss simply because the devs nuked the chart. And that's really the biggest mistake that I've like these type of mistakes where I don't read up on security enough because security is actually really important. It can really just mess you up totally if like similar events happen. Yeah. But like
What about you, Otto?
I guess for me, yeah, thanks, Geek Lad. I mean, there's a ton of specific examples, but if I had to generalize, I would say probably not having an exit plan. So getting into a position, for instance, using Yusef's example, buying inventory of a certain asset at a low, such as Jupiter, like he did, Jupe, and then not having a plan for when I'm going to get out should my anticipated move not occur, and then just kind of staying in it and having deep out of the money losses without the ability to market make out of it. That would probably be the biggest one if I had to generalize.
How about you, Mario?
Yeah, I think mine is also not going wide enough with bid ask. I did that quite often in the beginning, and I used to double down whenever it exited my bottom range, so I can shorten the curve and get my exit sooner. But then that backfired twice in a row, so I had to deviate from that strategy completely.
How about you, Heavy Metal Cook?
You can hear me, right?
Yes, sir.
Okay, so well, really kind of it's generalizing here, but some biggest mistakes that I made, especially early on, was maybe not reading, doing due diligence, my own research on it. I getting into a token just because someone else says is a mistake. But and it's really like kind of learning to read the charts and figure out where, like you were talking about, maybe go low enough or go high enough. Um, and obviously the mistake of sleeping on meme coins, because sometimes you will uh, uh, find yourself waking up to wrecked. Um, the But also, I think sometimes one of the other big mistakes is chasing a position or rebalancing too much. That's another thing. If so the price is here, and say you went really tight with your range, uh, and then the price moved, and just picking up and moving constantly, it's a really great way to get wrecked fast. Losing your money quickly through impermanent loss, making it permanent. Um, so that's where you got to kind of figure out. Sometimes it requires a little patience, let it come back before just jumping and moving. The number on fees can be misleading, and I think that's a mistake some people think. It's just like, oh, well, I've got $50 in fees. What they haven't paid attention to is that, well, you have $75 in losses, so you haven't made up for that yet. So um, that's something you really got to understand that first and pay attention to before you start moving around. I don't know if that was the answer you guys wanted, but
Nah, like it's
Yeah, that's good.
yeah, it's good, definitely. And like to summarize, to summarize it for me at least, it's just security, right? Like whenever we provide liquidity, in order to not get effed up on divergence loss, you simply need to like especially when you provide liquidity to meme coins, right? You simply need to do more like research on the tokens that you provide liquidity to, so that you don't get messed up by some developer selling 40% of the supply and just doing like some stupid stuff. But anyways, yeah, I'd like to answer why I chose the Jupiter/Sol market instead of Jupiter/USDT, because I couldn't like instead of providing liquidity to a Jupiter/Sol market, I couldn't really just have provide liquidity to a Jupiter/USDT market and possibly have made more profits from divergence loss. But the answer is the correlation matrix. So as we can see here, this picture here, Sol is very correlated to Jupiter. That means if Sol goes up in price, Jupiter will very likely go up in price as well, and vice versa, right? So if Solana goes down in price, Jupiter will go down in price. USDC is not really correlated to any of these two coins because it's not volatile. It doesn't move, right? So yeah, I did Jupiter/Sol simply because I was scared of Jupiter retracing or even going down in relation to USD way faster than it would in relation to Sol. And that was because I was going to sleep. So I wasn't so like before I opened this position, I was actually going to sleep. Yeah, and therefore I didn't really want like too much volatility because it could possibly wreck me in divergence loss if Jupiter just nuked like compared to USD. Yeah. And I also did a very like tight price range. I did allocate much of my liquidity within a very tight price range. Yeah. So I didn't really want too much volatility. That's why I did Jupiter/Sol. Yeah. Okay, cool. So achieving a positive return from fees. Your fees earned through a DLMM position will solely and only rely on the amount of volume your position has done, because when providing liquidity, you're earning a percentage of the volume made with your liquidity that you're providing, right? Through the base fee of the pool you provide liquidity to. Sometimes this base fee can change, as we said before, if there is a spike in volume and so on. And that's why we should probably call it dynamic fee, because the dynamic fee will change but not go below the base fee in accordance to how much volume a specific pair is doing. So if there suddenly is a lot of spike in volume for a specific pair, the base fee will increase due to this dynamic fee function. So yeah, the most important parameters there are when it comes to choosing pairs that can generate you much fees are volume, like the volume a pair is doing, as well as the liquidity that is backing a specific pair, and this ratio there is between these two numbers. Essentially, yeah, okay, yeah, maybe we'll discuss it later, but essentially, if there is a lot of volume but low liquidity for a pair, there'll be a lot of volatility if the liquidity is allocated within a reasonable price range. Yeah. Yes. Okay. Cool. Yeah. And important things there are to consider when you want to achieve a positive return from fees is that your exact return from fees will be the amount of volume your liquidity has been resulted in, multiplied with the base fee. And if the base fee is increasing, you'll get more fees. Yeah. And when you want to achieve a positive return from fees, you want to allocate all or most of your liquidity at areas where there's most volume. For example, at support or resistance areas. And we'll look at an example now. So achieving a positive return from fees. Yeah, and I'll show you Goldie/Sol because I did this yesterday as well, actually. Yep. So what I did was that I made a single-sided bid-ask strategy with 1 Sol worth of liquidity. We can see the transaction here. I did it 12/17/15 my local time, and this is exactly here. Okay, so here is a Goldie/Sol chart, and this was the exact price when I made a 1 Sol single-sided bid-ask strategy. As we can see, a few seconds later, like we're talking 10 seconds later, someone sold a lot, right? And price went down by, like at its lowest price point, it probably went down like 30% in like one trade, okay? So this was a huge sell. So if we zoom out a bit on the chart, we'll see that this was when I provide liquidity to, right? But when I made my position, I chose a lower range. I chose a lower range of like and I chose this lower range based on previous support, like previous support, right? So whenever this market here has or wherever this market here has had support. Oh, wait a minute. Wait, let me just rephrase that. So yeah, my lower range of my position was exactly at this support area here. So we can see that approximately, like we're talking, like this is actually in a 1 second chart. So this support is not to be like it's not very strong, this support here. Like price could easily just go through it and just nuke even more. But what the point of this example here is that there was support here. We can look at it. Like there's some basic support here where price resisted whenever it resisted from breaking through it whenever it went to the support area here. So yeah, point is this was my lower range. And as this huge sell-off happened, okay? So this huge sell-off happened a few seconds after providing liquidity. What happened? Yeah, and after this huge sell-off happened, price retraced a bit, as we can see. We can probably see it better here. So someone sold a lot of the supply, actually going through my range. Yeah, it went so quick, so I didn't even observe price going out of range. But here in this radian pool, price would actually have gone through my range. But essentially what happened was that price retraced really fast. And we'll be able to see this here in this P&L, okay? Because I closed my position 46 seconds after opening it, okay? And what happened was that I didn't like price didn't go out of range, okay? So I closed my position within my range. When I closed it, I received 0.8 SOL and around 10,692 Goldie tokens, okay? And if I want to calculate the divergence loss that I received from this position here, I'd need to subtract the amount that I deposited with the amount that I withdrew, right? So I withdrew this amount here. This is an amount in SOL. And if I subtract it from 1 SOL that I provided, I received a divergence loss of minus 0.005 SOL. So that's around a divergence loss of 0.5% in relation to the amount that I provided. But for fees, instead, I made 0.03 SOL plus this amount here, which equates 0.07 SOL. So my fees actually outweigh the divergence loss that I experienced, giving me a positive P&L, okay? So my P&L was 0.065 SOL. Although like price, as we can see, tanked. So I provide liquidity at around 196. If we were talking about the most significant bits here. And I closed it approximately, yeah, we can see the transaction when I closed it. So I closed it 46 seconds later, giving me a time of 12:18:36. So maybe we can find the price of when I closed it. So I closed it exactly here, okay? Like around here. Yeah, at 1.9. So that was close to the price when I deposited my liquidity to. When I deposit my liquidity. Yeah. But this is but it was still below the price that I provided liquidity to like at giving and that's actually really unique because it is not you like what I did here was essentially shorting this pair here because I knew that if price would go down to the support area here, there'd be a spike in volume. You can actually see this by these candles here, okay? So these candles down here represent volume. We see prior to this big sell-off, there was not that much volume. We can see these small candles here. After this huge sell-off, there was a spike in volume in this specific pool here. You can assume similar. Like I'm watching a radian pool here. That's not the pool that I provide liquidity to, but you can pretty much just assume similar numbers in the Meteora pool, because the Meteora pool just follows this radium pool here. We'll get into this later, actually. But yeah, so what I utilized was basically that I knew volume would go up, would increase if price touched this support area here, and that's what happened. So what? And that's what I like. That's what we like when we provide liquidity. We like volume, right? Because that's the only way that we can earn fees from. We can only earn fees when our liquidity is doing volume. When someone is using our liquidity to swap with. And much of this volume, and this spike in volume here, I utilized that and made a good amount of fees from that volume and closed my position approximately at the initial price point, where actually below it, which is quite OP because I made money although price went down. Yeah, that's like the goal of this example here. Okay, cool. So this position here represents the position that I did here. It's not the exact same because I didn't record or I didn't record when I did this exact position here, but we can just kind of talk about what happened. Okay, so I provide liquidity at around this price point here, 199. Price suddenly dumped a lot due to someone selling off a huge chunk of supply, going down to actually 155. So that was actually so that was out of my range, right? But price quickly went or retraced back up again to around 192 or 188. I don't remember exactly within this Meteora pool, but we can see that on the radium pool it went up to like 19. Okay, was probably this spin here that price went back to in the Meteora pool that I provide liquidity to, and then I closed it. So yeah. And why did I do a bid ask strategy for this specific position here? That was in order to mitigate risk and maximize capital efficiency, because I allocated most of my liquidity here at this support area that I was lining up before. So most of my liquidity was sitting around here, right? Yep. And the risk essentially, and yeah, okay, cool. That's yeah. I think. What do you think I should add anything, Kiglad? Is there any questions you have, or anyone else?
No, I think that's good. I did see a question earlier, and I know Mario had answered about, but I think it's worth mentioning live on the
Okay.
call, which is, strategy for a token that's, continually appreciating. I think you already kind of demonstrated that in the prior part, right, where you swap the token and then you put it on the top side. But Mario also suggested another potential strategy is to maybe swap 30% of what your total investment is going to be, and then to put the rest of it, the 70% on the bottom side, right, to catch a retracement just in case
Yeah.
the token does take a dump. So I like that strategy as well. Mario, I don't know if you have anything else to add, because I think you were answering some other questions along those lines.
Yeah, I enjoyed answering the questions. Don't have really anything to add to Yusuf. I think he covered the basics pretty well. So yeah.
Okay, cool.
There is a question here in the Q&A.
Okay.
So he's asking, says, before now, I used to think whenever there's a pair in a DLM pool, it has been vetted by the team. So is it possible for people to deploy a contract that is not verified on the pool? So the team doesn't verify any token on there. This is the do your own research. Especially like whenever, and this is a new feature, whenever you go into a pool and it's an unknown token, there's going to be a link for rug check. But you should be rug checking tokens, especially memes, verify that it is the correct one. And I've even seen like on IO token launch, for example, someone created a fake IO token, and it was locked, and I mean, I know a guy, he got fooled by it. He went in and he deposited money and he lost a bunch of soul because it was a locked token. So, uh,
Yeah,
it's totally possible for bad players to do things. This is
a
do your
blockchain.
research, pay attention, don't just mash buttons.
Yeah, yeah. I'll add a bit. So Meteora is in many ways permissionless. Like everyone can make so first of all, the Solana blockchain is permissionless. So everyone can make a token, right? If they want to make a token, they can make it. Meteora is also permissionless in the way that everyone can make it cool, right? So you need to like we will touch on it later on when we do the live demo of LPing. But security is really important. Being able to make a proper research on the security behind the token address and related pools to this to a token address is highly important if you don't want to get fucked up by some developer or something else. Okay, cool. So yeah, now we'll talk about how to avoid wash traded tokens. And yeah, and then I think Mary can just can just turn his microphone on because yep.
Yeah, so do you want me to take over? Because I found some pretty good examples now live actually on the deck screener in the top 10
Okay.
that
Yeah.
we could demonstrate to people live how they work.
Go for it. Yeah, you take
Yeah,
the
go
screen.
for it. Yeah. So you can just share your screen, Mary, okay?
Yeah, 1 second.
Okay.
I love Mario's goose icon.
Yeah, it's pretty cool, man. I need to I've thought about like using it as a PFP because I bought a goose a few weeks ago actually.
Okay, so just to confirm, you guys can see my screen now, yeah?
Yep.
Yes, we can. Yes.
Okay. So this is one of the tokens that's in top 3, and it is very, very easy to fall into these traps because we are all looking for the most volume, and as you can see, this coin has 134k volume in the last 5 minutes, and it's been pretty consistent. So you might think this could be a great opportunity to provide liquidity for and get the fees. The thing is, these tokens are being wash traded, and only a few % of that volume is real. You can notice that by the consistent pattern of volume with some dips when their bots stop working. So they're usually around 150 to 200k volume per 5 minutes. They're
And
usually
Mario, I'm sorry to interrupt. Maybe you can provide a quick definition of wash trading for folks that may not be
Sure,
familiar with
yeah,
that term.
of course. So as you can see, some of the trades, they buy and sell for the same amount at literally the same time. So these people buy for 1.3 sol and sell for 1.32. The only people that are gaining are the ones that bought in the first block. That would be the initial owners of this token, and they have big bags. So they use those bags to drain the actual liquidity that's coming in from normal people buying the token, and they usually do it in these intervals. So you can see these big red candles. They can also easily flip the switch and make the coin go to 0 within minutes, as you can see from this example. So this one literally went from 800k to 200k within less than an hour. So let me show you a rug check for these. They're usually copycat tokens, and some of them are not. They can be old tokens, new tokens, it doesn't matter. They can be all dormant tokens that are low market cap, so they're cheap to buy into by these guys. If you check bubble maps for this one, you can easily spot the issue with it. There's a cluster that holds 90% of the token. But it's not always the case. As you can see with this one, oh, it's rugged. I found it like an hour ago and it's already rugged. So if we check the bubble maps for this one, rug check is the same. Let me just Find the bubble map. So this one looks pretty okay, but as you can see, a lot of wallets hold the same amount. So if we check one of these wallets on SoulScan, you can see, okay, wait. This one might not be a part of it. Let me check a different one. So, okay, it might be a small amount. They usually either buy on the first block when the coin is created, or get the money, get the token from the same wallet, distributed from the same wallet. And then when the price goes up, they simply swap it and drain the liquidity out from the pool. So I also wanted to show you, this is how they usually end up. There can be CDOs, but for these tokens, there's just no point in doing a CDO because they have nothing going for them. The art is usually fake or copycat tokens, so there's not really much positive about them. I also wanted to show you some of the P&L screenshots you can see in our Discord. They usually show you good profits. This is from Alex, one of our members there, and he made the MetLex tool. So he managed to get, I want to dig into meme coins. I would suggest doing it with only a few % of your total balance. So maybe start with $20 and see how it goes, if you can make the strategy work, and then work on that.
Yeah, and Mario, if I may, I just want to hammer a point home here. And we say the word rug, and it usually just means it dumped. But it's very easy to get tempted by seeing fast and huge profits. That's the exception and not the norm. The norm is more likely losing. But whenever you see people, they've doubled, tripled, quadrupled their money in an hour or less, that's rare. Don't expect that.
Especially not from free fees. Like
Yeah.
it would be very hard to 2x your position within a few hours on fees alone. Like I'm not sure. Can you guys hear me?
Yeah,
Yes.
we can.
Okay, cool. So it would be very hard for you to 2x your position within a few hours solely from fees. Like many of the cases where you see someone 2xing his position, it is most likely from a divergence loss perspective as well, because like all the P&L calculators, they include divergence loss as well. So that's essentially when you buy something and the price ratio goes up. So like normal trading, right?
Yep.
Yeah.
And
So there's
Mario,
a question.
maybe you could also go back to the bubble map and
Of course. Yeah. Which one?
Yeah. So maybe you can explain in a little bit of detail why it is that this is a rug.
Yeah, so this one has one main wallet that probably minted the tokens, or if they're pump fund launches, they simply are the first ones to buy, and then they distribute the tokens to other wallets that they also own. It can pop up like this, but the issue is with those that don't show the clusters. So this one clearly shows the cluster, and you can see that it is a rug. But this one, on first glance, looks pretty okay because there are no clusters. But when you do more digging, they in 90% of cases, there are multiple wallets, and these go like, it's usually 100 wallets holding around 60% of the supply. You can notice the pattern of a lot of wallets holding the same amount, and simply take your time, go through some of these wallets, do the checks. It's better to skip a coin, don't provide liquidity on it, than to go in and lose your money. So play it safe.
Absolutely. You can also in many with many tools like Deck Screener, Photon, and so on, you can actually filter for wallets and see whether if they have transacted with any pools, right? If they haven't transacted within any pools, they have received it from someone else, and if there are many wallets of this case, it's likely a scam.
Yeah, so there's a question out here. The number one way people lose their money or get wrecked on the DLMM
Is it when it's trading moves out of range, or is it when the two tokens move in opposite directions? You guys give a
I think it is when people get in too late on these meme coins, because you can still make money with all of these. You can still make money with this one, even though you know it will rock. But if you come in now, the risk is exponentially higher than if you got in at the beginning. So if there is a good opportunity and you think you believe the coin will survive, I would suggest going in as early as you can to capitalize on those early fees. Because when the market cap is low, you also get more fees in the token. And if that token appreciates, your fees will be worth more, and you will be able to cover your losses a lot easier than if you came in at the top.
And then Mario, in terms of the volume, and so like I know you've got some very good experience with identifying these cases almost just by looking by the volume alone. Maybe you can talk a little bit about that, and then maybe also compare it to a real token and discuss what the difference is
Yeah,
in
sure.
what the volume looks like in a rug token versus a real token.
So as you can see, the volume profile is usually pretty consistent, and it stays around 100 to 200K per 5 minutes, which really looks good. But most of that volume is routed through, these rugs usually have set up flux bean pools. They're most likely the cheapest to run through, so they don't use our pools at all. The only trades we get is a fraction of those real trades and arbitrage trades. Let's compare it to Goldie. That's one you've been DLMM a lot. Let me just find it. So as you can see, the volume on this is a lot different. Let me just pop this. So you see there are peaks. There's been 400K volume in 5 minutes here. That's probably when the dove sold. And it's not consistent at all. There can be moments where there is practically no trades, then some spikes, then some ranging. And pretty much just by looking at this, when you see a consistent volume like this, I would skip the token altogether, especially if you're a beginner, because it is really hard to make any money out of this. This one had 4.3 million volume, but let's say 4.1 million of that is wash traded and not routed through our pools.
Perfect. Thank you, Mario.
Yeah, so if Yusuf wants to take over with the slides now, he can.
Okay.
Yeah. Okay. Yes.
Hey fellas, just as a quick time check, it's we got about 50 minutes left, and maybe we can get some practice going.
Yeah.
Yep.
We'll be doing live LPing now with the okay, cool.
But I think we wanted to do the graduation requirements first, right?
Yeah, we will just we will. Cool. So I'm going to share my screen now. Can everyone see?
Yep.
Cool. Okay. Nice. So yes, as we've said, day 2 is a day where we will introduce you guys to the rules there are in order to graduate from the bootcamp. You will be earning a Meteora role called LP Army Private if you graduate from the exam. So yes, cool. The rules are you firstly need to DLMM with at least 100 USD worth of assets for at least 1 hour. You will have to obtain a positive profit and loss. You can use some tools like Alex. Maybe someone could link tools in the chat. You can also find the links.
It's also on the form. So when you guys go to fill out the
yeah.
form, the link to Alex's tool will be in there as well.
Yeah, okay. So you and when you paste an initiating or a closing transaction or a transaction where you claim fees from your position into this app from Alex, the PNL will show up, and then you can just share the results in this form here. If you scan this QR code, or if you there's also a link to it if Yeah, which can be shared in the comment section.
Let's just hold that up for a second for any folks that are out there on Twitter or YouTube watching so that they'll have a little bit
Yeah.
of time to grab that QR code.
Mm.
And then in the meantime, maybe we take a look at some QA we've got here.
Yeah, that's good.
Okay, so somebody wants to see an illustration of how you added the one-sided LP. So I think you can demo that live. So
Yeah.
so we'll see that in the demo.
Mm.
Somebody else is asking, is it better to pick a bin size 100 and then pick 20 bins in it, or go straight into a bin of 50 and pick 20 bins of it? Which one would be more rewarding for me if the coin is kind of stable, for instance?
Do you want to answer that, Giglet?
Yeah,
Should I?
yeah, go ahead, Mario.
Yeah, I would like to explain it because
Okay.
I've been doing some research on that. So you want to go for the smallest bin step size as you can that covers your preferred range. So if you should first do a research on which range you think the coin will stay in, and then choose the fee, the base fee you want, and go for the smallest bin step, because as the volume goes through the bins, the dynamic fee increases. And if you use smaller bin steps, for example, a 20 bin step versus a 100 bin step, your liquidity will be used a lot more in the smaller bin step. So
Perfect.
essentially, my recommendation is to go for the smallest bin step possible while still covering the range you want. It makes no sense to shorten the curve in larger bin steps because you're losing out on a lot of volume.
Yeah, that's true. I think it also depends a bit on the pair that you're providing liquidity to. If it's we'll likely talk about it when we start live LPing, but essentially if a pair is very volatile, you'll need a high bin step in order to cover some of the divergence loss that could occur due to the volatility of the pair. Because if price pumps and jumps by 5% every 10 seconds, like you simply need a high bin step in order to survive the possible divergence loss that could happen from such volatility.
You could capture the fee, the volume and the fees on the lower bin step, but it gets to be a lot to manage because you end up having to open a lot of positions. And you have to create a lot of bin arrays, which is cost that you'll never get back. So, if you have a small amount of capital, it could be a lot to manage if you're in a very small bin step, because you'll have to open multiple 69 bin positions, and you're gonna have to pay for a lot of bin arrays. So if you have a small amount of capital, that may be another reason that you may want to go to, a higher bin step to cover the range. But what Mario says is true. Basically, you want to try to go into the lowest bin step possible, so that you can capture a lot more volume that way. I think we can go ahead and go into or if you want to stop the screen share on the deck and get ready to do the demo. And then I know Heavy Metal Cook has a few words here as well.
Yeah, so I mean, there's a bucket of questions here about the form. So let me just try and clarify that real quick. You can't use the past transaction. It needs to be one that's, started from this point forward. There isn't a percentage. It doesn't you don't have to be 5%. It just needs to be positive. So don't overthink this. $100 USD worth of assets, it needs to be positive P&L. Are we not counting stables?
You can do yeah, so since we're not going to be counting percent, I would say let's not do stables. So it'll be soul pair or a
USDC, USDT.
Zito soul pair, USDC, USDT. It needs to be a volatile pair.
So, and that could be, like Sol versus, something else. So it just, yes, you can do it with memes. Someone asked that. So I think deadline, it's 1 week from today. So make sure you get that done.
Yeah. Okay. Yeah. So if any of you guys have any more questions in relation to bin step, I could explain it. We did
Yeah,
explain.
once you get into the demo.
Yeah, okay. I'll just I did this yesterday actually, just in order to explain this question really quick. So the reason for it says that you generally want a lower bin step is that if we were in liquidity in a Sol USDC pair and we were choosing a pool that had a bin step rate, you would not be able to cover the price between 100 USD and 101 USD if these two price points were two bins. So let's say we have a Sol USDT pool. There's a B per Sol, and there's a bin. So the next bin would have to be 101 USD because you basically multiply the price of bin with this basis point. So yeah, that's what bin step means. Yeah. So you would not be able to cover the prices between 100 USD and 101 USD in this specific pool. If you instead chose a Solana USDC pool with a bin step of 10, then the adjacent bin to the bin that would be 100.1 USD. So in that case, you would be able to cover prices between 100 USD and 101 USD. And then this price range here would consist of 10 bins. Or yeah, approximately that amount. Okay, cool. Yeah, that was
Yeah, let's get to the demo. We've got about 40 minutes left here.
okay, cool. All right, guys. So yes, let me. Okay, guys. So right now we'll get into the demo. We'll try to LP some markets live with you guys. So the tools that I use in order to both to find relevant markets to LP, to analyze the security behind the token, and so on, are basically these 4 tools and the Meteora Discord. So we could start with the Medlex tool because he has built a tool that analyzes for the pools that have generated the most amount of volume. Yeah, within a with some filters here, as we can see. So if we want to find pools that have generated the most amount of volume within the last hour on Meteora, we could essentially we can filter and the pools would show up. Yeah, and it looks like this old Goldie pool has been doing the most amount of volume. I'd actually like to provide and do that because I did it yesterday, so I kind of have a feeling of how the market could do, how this market could do specifically. What I'm gonna do now is that I'll enter Photon. Photon is like Dict Screener, but it has more features that I think are useful. Yeah, I've searched for the Goldie Sol market, simply to watch how price has been doing. Okay, so yeah, past 5 minutes, the the pool with the most amount of Sol, which is this main radium pool, has made around 5.4K volume for the past 5 minutes. Yeah, so I'm likely going to provide a one-sided pool with just to view what areas there are in this specific market here. Okay, so it looks like price went down to so 214. The market has been trending in a bearish state for a very long time. The past 24 hours, price has gone down 7%. So yeah, overall quite bearish. Anyone else decided to chill it, okay? But for now, I'm going to do a one. So what I'll do now is that I'll copy, or actually I already have the pool here. I'll actually view for all of the pools there are within this pair, okay? So what I did was that I copied the token address from Goldie, this button here, or you can find this pool here on deck screen, or just, I think there's a similar icon to copy the token address on deck screener. And then I'll have to enable this this filter here because Goldie is not known. Okay, so these are the markets, DLMM markets there are right now for Goldie. Yeah. Okay, cool. So this one pool here has the most amount of liquidity. Yeah, I would like to choose this pool. I could go for this pool here that has a higher bin step, but the reasoning for why I'd rather choose this pool here is because I like, wait a minute, I wouldn't expect price to go lower than this price point here, and that will not require if you have a bin step of 100. Okay, we can actually compare these two pools. Let me just go back. Okay, so yeah, my laptop is lagging a bit, so yeah.
Now, I will say one thing. There are a number of markets where the pricing, the Meteora sites have some issues with pricing
Oh
and
yeah.
the fee amount. So I would say don't use Goldie for your exam submission because Alex's P&L tool won't be correct on it.
Oh yeah, that's true. Yeah, the API or some APIs, something is wrong with Goldie. Yeah, that's true. We can compare these two pools and then we can try to understand why bin step of 200 for my case here. Okay, cool. So would do a retracement if it went down to this price here, and that conclusion is based on previous data, right? We can see the price has gone. Is it from breaking this support area here? So yeah.
And just a 5-minute chart.
Yeah.
So the time step's 5 minutes, and so he's looking back to see how things 6 hours, maybe
3 hours, yeah.
Yeah. Okay. But I mean, the total view you've got there going back to 3 a.m.
Yeah, probably. Yeah. Okay, cool. So let me log in with my backpack wallet. Oh. Cool. And you can see what Giglad mentioned yesterday. I haven't made 9.7K from fees. I've made roughly.
You wish.
I wish, dude. I think I've made like 200 USD, I believe, like from fees. This is just a overinflated number.
So, and someone's asking in the chat,
Yeah.
and if in the demo you could kind of do a two-sided strategy, but have it skewed towards the upside, or maybe skew it towards the downside. So the 70-30 that Mario talked about earlier, where you've got 70% Sol and then 30% Goldie. Maybe you can demonstrate that.
Okay, yeah. Let's. So right now I'm going to do what Giglad mentioned. I'll swap some of my Goldie or some of my Sol for Goldie. I currently have 5.84, so that's around yeah, that's all. Let's do that.
And for the folks that are watching, if you want to follow along, please try to follow along. Don't put in the same amounts.
Yeah. I'm playing with, yeah. Okay, maybe I should play with one Sol instead.
Well,
So,
yes, but I would
I'm
say
going
to everyone on the call who's watching, don't put anything more than what you're willing to lose, because
Yeah.
this thing you could end up losing it all.
Absolutely.
So
Yeah.
if you don't want to lose any more than $10, don't put any more than $10 worth of Sol into your position.
Exactly. Okay. So yeah, for this okay, anyways, I'm going to do, although it's quite okay, actually it's to deposit one Sol worth of liquidity. So
remember, if you do one Sol,
Yeah,
divide that by
0.3.
70% for the other part of your position. So maybe do yeah,
can-
and then you do 0.7 sol. Yep.
Okay, cool. So I just swapped 0.3 sol for 115k Goldie. That's what I did right now. And yeah, okay. Let's go into the market where I wanted to provide liquidity, okay? So what I'm doing right now is that I'm making it within this pool here that had a pin step of 100 and a base fee of break this area here, or this area here, okay? So that would be my lower range. Let's try to yeah. So let's, what was the price here? It was a that I provided